All right, everyone. So welcome to our first VFM of the year. It's going to be a tax workshop, as you can see, for LGBT military families. So let me just go ahead and show you. This is going to be our agenda for the virtual family meeting. We're just do a quick speaker introduction, and then Jules is going to go over tax filings and tax tips, and then we'll have a quick Q&A at the end, address any generalized questions. If you do have any questions that are more specific, then you can contact Jules offline, and we'll provide that information to you at the end as well. And then we'll just go over some upcoming events that we have. All right, so Jules, go ahead if you want to introduce yourself to everybody.
Yeah, and can you go ahead and forward the slides on your end there? Advance the slides, I guess. So my name is Jules Tybor. I live in Denver. I'm an out and proud trans man. I'm very active in the LGBT community. I have a master's degree in tax from the University of Denver, which is basically a master's degree of tax law. So that's what my training's in, and I'm licensed as an enrolled agent. So the LGBT community is part of my passion, and I totally love to do taxes. So I'm really excited to be here and kind of merge those worlds and also be able to give back a bit to all the service members who, put on the uniform and serve our country. So go ahead there, Colin, and introduce yourself.
All right. So here's my slide. So I've been in the Army since 2009. So you can see I'm currently a student at the University of Colorado, Denver. I first became involved with the LGBT military community through OutServe, and that was back in 2011 in December, just a couple months after the repeal of Don't Ask, Don't Tell. And I finished up my time on active duty, and now I'm in the reserves here in Denver. And I've been with the Military Partners and Families Coalition before as a development intern, as well as just like a general volunteer before that. So I've been with the organization for a little over a year, and I love working here. So that's it for me. So we're going to go ahead and get started with the presentation now. So just some quick etiquette for this event. So those of you who are on the phone, you've already muted, which is great. And those of you who are online, use the chat box function to type in your questions, please. So if you have any questions as he's going through slides and you need some clarification during that slide, you can go ahead and send me a message and I will relay that to Jules. And if you have any other questions that are kind of more general about what should I do, you can go ahead and at the end during our Q&A session we'll answer those. And as I said before, if you have any specific questions, please contact Jules offline because every case is very dependent upon your situation. So they kind of don't apply to everybody. So it'll be hard to answer your question without helping everybody else. All right. Anything else you'd like to add to that, Jules?
No, I think that sounds good, and we can kind of jump right in here. So, as you know, this is our Military Families Tax Workshop, and the next slide has our outline. So we're going to talk a little bit about federal tax issues for LGBT families, federal tax issues for military families. Those are both pretty kind of specific niche tax needs. And so we're going to kind of, part of the presentation is try to bring some of those together and how that works for different LGBT military families. We're going to talk about MSIR. I hope I'm saying that acronym correctly. That's what I was told it was last year. On the federal level and then on the state level. And so we'll go through some of the state same-sex tax issues. I have a pretty detailed example that just kind of shows the difference for some states. It might not be the example specific to your situation, but what it hopefully does will open up your mind to the questions of how does this apply to me and my family situation, and how do I figure out kind of which state rules apply to my situation. I'm going to touch a little bit on the Affordable Care Act and TRICARE. I heard there's a lot of questions about that. do a few tax tips, and at the end have some resources, and like Colin said, we'll do some Q&A. So if we go to the next slide, as Colin had mentioned, every person's tax situation is different. The person next to you might have the same W-2 but have a completely different family situation, and so their tax treatment's going to be different than yours. So we're going to try and talk about some of the issues that you'll encounter, but it's not answers as to what's your refund going to be. It's important to find someone who's well-versed in the issues that apply to your family. So if it's military issues, LGBT issues, adoption issues, whatever it is, find a tax pro that can walk you through that. And then you'll see in the tiny print on this slide my Circular 230 disclaimer, and that's just my little legal piece that I have to put on all my emails and all my presentations. So this is education, not advice, and you can read into that, and you know how disclaimers go. So we'll jump right in the next slide and talk about DOMA. Most of you know that DOMA, the Defense of Marriage Act, Section 3 of it was ruled unconstitutional last year. And that was the part that said marriage is between a man and a woman, and for purposes of all federal laws. So Edie Windsor, after the passing of her partner, stood up to DOMA. She was getting hit with a big tax bill for estate taxes, and DOMA fell. What was really exciting for me about the case is when I started my master's degree in taxation, I was in essentially a law school, and had thought maybe that I was moving in a career direction where I was giving up on my social justice and LGBT advocacy work. And one of my first days in class, my professor said, if you have a same-sex couple that wants to file a joint return, don't do it because it won't stand up. He said, but in a few years, there's a case that's working its way through the courts, and in a few years, DOMA is going to be ruled unconstitutional, and it's going to be because of a tax case. So personally and professionally, I was very excited that I could be in a kind of technical, conservative profession and still have it be part of my social justice and civil rights and human rights kind of activism. So on the next slide, what the IRS said about filing of DOMA was with Revenue Ruling 2013-17. And Colin, if you can advance that slide there. And what that said is that for federal tax purposes, in 2013 filing year, which was actually 2014 calendar year, and going forward, same-sex spouses must use a married filing status. So that's either married filing jointly or married filing separately. Once married, same-sex spouses may choose to amend prior year returns using the married filing joint or married filing separate status. So if it was advantageous to a couple who had been married for a few years to amend their returns and refile, they could go ahead and do that on the federal level. The same-sex spouses had to be married in a U.S. state or foreign jurisdiction whose laws authorize the marriage. And for Revenue Ruling 2013-17, domestic partnerships and civil unions are not considered the same as we're not considered marriages for federal tax filing purposes. Now, since that point in time, there have been some states that have said, if you're same-sex civil union, we will recognize that as a same-sex marriage. So that's kind of state by state, and that's one of those things that's still in flux. Next slide, please, Colin. This is my favorite one. So when I did this presentation last year, all those states listed under 2013 were the states with marriage equality, so it was 17 or 18. And then as you can see, 2014 we added another 20 states, and I hope this is up to date accurately. I have an asterisk by Alabama because they were in courts fighting marriage equality when I put the slide together, so we'll kind of see how that goes out, but shakes out. But as you can see, we're getting there. Most states are going to recognize same-sex marriages. It's a point of stuff being caught up in the courts right now, just trying to figure out who's fighting and who's fighting back. So it's a very exciting time for LGBT marriage, and just kind of what we've all been working for and fighting for a long time. Right now it's just in the red tape paperwork piece. And I know that as folks involved with the military, you know that sometimes a rule comes down and then it takes forever to be implemented. So that's kind of where I feel like we're at with marriage. Next slide, Colin, please. I want to touch on some LGBT tax issues. When I tell people that I do taxes for LGBT folks, I hear things like, oh, now they're taxing the gays, which is funny, but it's not. It's not the tax issues we're talking about. What we're talking about is relationship recognition. Are you married? Is it a same-sex marriage? Is it a civil union? Is it a domestic partnership? How long have you been married? And those kind of issues there. LGBT folks have tax issues around children, and that state by state there's different rules for second parent adoptions. So are there adoption credits? Can you claim your partner's kid on your tax return, and how does that all shake out? And that again is one of those, it depends on the family situation and where the relationship is and how the children fit in. Again, estate and gift taxes are a big issue, and that's the case that overturned DOMA. For most of us, we're not at that threshold where we will have to pay estate taxes. It's kind of in the millions of dollars range, but it's cool that that's how DOMA was overturned. And then there's the issue of imputed income, and this was something that LGBT couples used to face a lot more if they were receiving health insurance through their partner's employee, and it was being taxed as income, where a hetero couple, the health insurance for the partner, for the spouse, was not being taxed as income. So that's something that still, on the federal level, should be not taxed, but state by state, it's still kind of up in the air. Next slide, please. This is talking about transgender issues. As I said in my bio, I'm a transgender man. I've been in the community more than I've been out of it. I spent several years as a lesbian, identified before I came out as trans, and really have learned a lot of the issues that face trans folks are pretty tough. We had a really cool court case in 2010 where a trans woman fought the IRS. They said she couldn't deduct her medical expenses because they were cosmetic, but then the case affirmed the decision that transition-related medical expenses, most of them are deemed medically necessary and deductible. So for someone who's paying, $40,000 out of pocket to have various surgeries and medical procedures, and to not be able to deduct that can be very difficult. So now to be able to deduct most of that is really great. And we're also seeing more and more states are covering trans-related medical expenses. By more and more, I mean maybe 5, but we're getting there with others. So that's a big deal. And then I just wanted to say a little bit about name and access issues for trans folks. When someone's filing their tax return, they need to use their legal name as it is on their Social Security card. A lot of trans people change their name, and it's an expensive, lengthy process. Some can't do it, some can't afford it, some are in the process. So going in to have taxes done and to say, yes, my name is Jules, but my legal name is something different, causes a lot of anxiety. So I know most of you, when you go in to get your taxes done, have a level of anxiety anyway because it's taxes, but then to imagine yourself having to defend or explain or educate your tax professional on what your legal name is, what your gender is, who you are. And I'm an individual with a lot of passing privilege. Most people don't know that I'm trans or can't tell that I'm trans, but not all trans people carry that privilege. So to even approach someone about having their taxes done can be very difficult. So part of my work is to kind of bridge that gap for folks that run into those issues. Next slide here is something I added in. I'm pretty excited about that. There's been some, in 2014, there were some non-discrimination protections signed by President Obama, the executive order. So it's protections for transgender folks and for a lot more Americans based on sexual orientation and gender identity. So a lot of this applies to federal contractors. I threw it in this presentation because I know a lot of people who are in the military, and then when they're done, they do get federal contract jobs. So just to know that there's more protections there. And I also think this is, as an advocate in the trans community, we're hopeful that that trans folks will be allowed to be out as service members. So I know we've had Don't Ask, Don't Tell repealed, and I know we've had LGBT service members allowed, but we're still waiting for the T, and I think this is a move in the right direction. So again, that's just kind of a little more exciting news. We're getting there, slowly, but we're getting there. So the next slide kind of talks about, so we talked about some LGBT tax issues, and now there's some military tax issues. So those of you that have been in the military for a while know that you kind of have your own set of tax issues and rules within the regular kind of tax code. So typically when you go to find someone to help with your taxes, you want to make sure that they understand that the military has its own little, own little intricacies. So that's including which incomes are included or excluded in your gross income. The Military Spouse Residency Relief Act, MSR, which we'll get into more in this presentation in a little bit. Moving expenses are treated differently for military folks than non-military folks. There's different exclusions for selling your home if you've had to move away under orders. Job search expenses are different, and then extensions of deadlines depending on active duty and different things like that. So tax things that aren't available to non-military folks are something that needs to be part of your tax picture, or may need to be at least examined. Okay. So let's talk a little bit about MSR, and that's the next slide here. And for military folks, for the service member themselves, there's the law there. You can see it. I think I linked to it later in the presentation. So what it says is that normally a worker will be taxed in the state where the income is earned. So I work in Colorado, I get taxed here. But MSR changes the point of taxation for the spouse and service member to the state of domicile. So we'll go into a minute what domicile means there. The service member with a domicile in state other than where they are stationed, they can't be taxed on military income earned in that state, but they can still be taxed on non-military income earned in that jurisdiction. So if you have some part-time work or some complementary work in that state that's non-military, then that would be taxed in that state. So that's something that, regardless of your LGBT status, I should say LGB, because no T status for service members, that applies. What's different now is if you go to the next slide, this is for the spouse and what MSR means for a spouse. So before DOMA fell and before same-sex marriages were recognized, this wasn't available to same-sex couples because they weren't recognized as spouses under federal law. So what MSR is for the spouse is that a spouse who moves to the new state and establishes a new residence would normally become domiciled in that new state. But the MSR Act allows a service member to keep their previous domicile. So they get to choose now which state is their state taxation position. There's a lot of kind of different rules on that, and I'll just kind of briefly just say them, and these are things to think about when you're talking with your tax professional about if you want to become a resident of the state. I mean, you be taxed as a resident or domicile in your previous state. So most states declare residency at 180 or 183 days in the state. We'll go over the MSR requirements in a minute, but the spouse can't pick and choose a state of domicile. So you can't just be like, oh yeah, I want to pick Florida because they don't have a state income tax if Florida is not a place where you've lived. We don't inherit the domicile of the service member when you get married. So it's not like you marry into the you know, my husband's domiciled in this other state. Now we're married, so I get that state too. Doesn't work like that. You can't adopt the domicile of the service member. You just can't say, oh, I pick it because they picked it. You have to meet certain requirements, and you must have maintained a domicile in that state at an earlier date, and you have to have had at least lived there. You'll lose that eligibility of taking that state of residence, or you lose the eligibility of taking a state as a domicile if you claim residence in the other state by some of the following actions, and that would be like filing a court action, like a divorce, accepting in-state tuition, voting as your state of residence, using a property tax homestead exemption, or applying for state-specific tax credits. So go to the next slide. And I know that's a lot of information, but that's just kind of a starting point to get you thinking about what state are you in and what, kind of what your situation, what your particular situation is. So the requirements for the spouse, there's 3 requirements. Some states require a 4th requirement. So the 3 are that the spouse currently resides in a state different from the state. The second is the spouse resides in that state solely in order to live with the service member, and that the service member is present in the state in compliance with military orders. Sometimes if this service member is on active duty, that counts. And then the 4th required for some states is that the spouse and service member are both able to claim the same domicile. So that's where, again, you've had to live there together. So if we go to the next slide, I'm going to change gears a little bit. Now that we've laid some foundation for EMSA, we're going to talk a little bit about same-sex marriage and what that means in different states. So we've got 50 states in D.C., which is pretty much a state. I've heard that from you folks out there, that you should count as a state. So what you have to look at within your state, these are the different variables. Is same-sex marriage allowed? Are domestic relationships allowed? And now we're looking at, are those recognized as marriages? Because like I said, some states have elevated that status. Is there a constitution or statutory prohibition on same-sex marriage? And we're seeing a lot of those cases kind of going through and falling. But there are still some cases active on that. Does the State Department of Revenue generally require the same filing status as the federal return? For example, last year Colorado did not allow same-sex marriages, but their state tax return was based on your federal filing status. So they said, okay, we don't allow same-sex marriages, but since you filed as married for your federal, we're just going to allow you to file married for your state. So that's, again, like a state-by-state issue there. And that falls into the next one. Has the state provided any guidance for state income tax treatment of same-sex marriages? And then the last one is the taxpayer permitted to amend state income tax returns with married filing status. So that's saying if you've been married for several years, can you go back and change your state tax return to reflect your married status? So those are the variables that come into play as you're trying to sort out the state tax filing piece. So if we can go to the next slide, Colin. This one's really exciting to me. It's kind of another informational one, is what happened between 2013 and 2014. So in 2013, 21 states allowed taxpayers, same-sex married taxpayers, to file as married. And in 2014, we're up to 30 states that are allowing that. So that's a jump. And by 2015, 2016, you'll see all states. There's still some states that say even if you're married for federal purposes, for your state purpose you have to file as single or head of household, and that's 12 states. And then there's 9 that either don't have a state income tax or they don't have a designation just for the way that their state taxation is set up, where there's not a different structure for single or married taxpayers. I didn't put that on the 2013 one, but It's kind of the same there for 13 and 14. Okay, so I know that's a lot of information, and now we're really about to get into it. So that was the easy stuff. What I'm going to do is outline an example. I'm going to give you some facts for a couple, and then tell you about what the federal filing guidelines will be. And then we're going to go through and give examples of 3 different states that could be chosen as domicile. So for the same facts, 3 different states, and then if they use their home of record. So just to see how the tax treatment varies under the MSR picking different states of domicile. So here are the facts. The service member and his spouse reside in D.C. due to military orders. They had a same-sex marriage in Iowa in 2011. Both the service member and spouse moved to D.C. in 2011 from the state of domicile, and when we do the examples, we'll pick different states for that. And that all the requirements of MSR are met. So we can see those there. So the service member and spouse are required to file a D.C. return for the income attributed to that state that's non-military income. So that's the main facts. So the next slide here, Colin, this will show what we have to do for federal purposes. So on their IRS tax forms, they are required to use a married filing status for the 2014 federal tax year. So that means married filing joint or married filing separate. They may choose to amend the 2011, 2012, and 2013 federal tax returns to use married filing status. Now, because this couple was married in, 2011, for 2013 they should have used a married filing status, and not everybody did because not everybody understood what was going on, but they can still go back. The other years that are open are 2011 and 2012 to go back and change the status to married. And that's one thing I'd say about 50% of the couples that I had that were eligible to amend, about 50% did because it gave them a better tax situation. About 50% didn't because they would have owed more tax. So that's an option for folks there. And different things that would give more tax advantage could be like moving expenses or job search expenses for the spouse. Okay, so that's the federal story. The next slide is we're going to use the same facts, the same example, and say that the state of domicile was Iowa, so that they were living in Iowa before they moved to D.C. under orders. So for 2014, they could file the state tax return in Iowa, both service member and spouse. The Iowa filing status will follow the federal status, so that'll be married, either the married joint or the married separate. And then for the state of Iowa, they could choose to amend the 11, 12, and 13 Iowa state returns using the married status. Iowa is a state that allows same-sex marriage. They were one of the first to do so. And just a note on all of these, if in previous years they chose the domicile of Iowa, they would stick with it. If they choose not to use Iowa, then they can't go back to it next year. So once you pick, you gotta be consistent. One thing the IRS, and probably a lot of federal institutions like the military, one thing they love is consistency. So don't change the rules in the middle or the red tape gets stickier. Okay, so let's go to the next slide and say same federal facts, same example, but let's say instead of moving from Iowa, the couple had been in Missouri. So they lived in Missouri, but they did drive up to Iowa to have their wedding, and now they've got their orders and they're in D.C. So under MSR, the service member and the spouse can file their state tax return with Missouri, and the Missouri status will follow the federal status, so married filing joint or married filing separate. In Missouri, though, at this point, they cannot go back and amend the prior Missouri state tax returns using a married status. So even if they choose to amend the federal returns, they can't go back and amend the state returns. So that's something that may or may not have a big effect. So at the time I wrote this slide, Missouri did not allow same-sex marriage and has a constitutional or statutory prohibition on same-sex marriage. But Missouri generally requires the same filing status on the state returns as you use on the federal returns. I don't know if this was a great state example to go with because I think Missouri might be in the middle of a court battle. So we'll see how that shakes out and how that changes. This could be different in a week or two or in 3 months. We don't know. Okay, so let's go to the next slide. So this is the same couple, and they lived in Georgia, went up to Iowa and got married, stayed in Georgia until they got the orders to move to D.C. So under MSR, again, the service member of the spouse can file the 2014 state tax return with Georgia. They can say that's their state of domicile. However, Georgia will not allow them to file a married Georgia tax return. So what they'll have to do is break out their adjusted gross income from the federal return and each file as single or head of household, depending on whichever status fits. So it's a recomputation of the federal return as single folks in order to compute the Georgia return. And the prior year Georgia returns cannot be amended to change the filing status. So Georgia is one of the states that currently does not allow same-sex marriage and has a constitutional or statutory ban on same-sex marriage. But Georgia generally requires you to taxpayers to use the same filing status as they did on the federal. So in Missouri, they said, okay, go ahead and follow the federal, and in a state like Georgia, they say, no, recompute the whole thing and give us a whole separate return, filing as single. Okay, so I know that's a lot of information, but there's one more scenario. So the next slide here says, okay, so the couple took their orders, went to D.C., and they decide to file D.C. as their, I'm going to say the word state, even though that's not technically accurate, but their state of residence, so home of record is a better way to say it. So the couple files their federal return, but then for the state return, they can choose to report all their income in D.C., make D.C. their home of record. They'll follow in D.C. You follow the federal status, so they'll be married filing joint or married filing separate, and they can choose to amend any D.C. returns going back 2011, 2012, or 13 using that married status. So D.C. again is one of the almost states that allows same-sex marriage. So the next slide just kind of gives us a recap to think about if MSR is something that applies to your relationship and to your tax status. So the first piece, so look at the relationship recognition. Are you in that same-sex marriage? The second is to look at the MSR requirements, and there's that 3 or possibly 4, depending on what state you're looking at. Do you hit all of those requirements? And then you want to look at the state of residence, so the state that you've taken orders in. What are the variables there? How do they treat same-sex marriage on the state tax return? Look at the state of domicile. So again, if you're in D.C., you're looking at D.C., but you also want to look at either if it's Iowa, Missouri, Georgia, wherever it's at. How does that state treat your same-sex marriage on their tax returns? So that's the first few steps. And then you want to say, what are the tax advantages for the current year? So we're in 2015. You're looking at tax advantages for the current tax year, which is 2014. Maybe you do better in 2014, with state of residence versus state of domicile, but then also look at the future years. Sometimes folks make a tax decision based on right now and don't really look at what's this look like in 2 or 3 or 4 years down the road. Maybe claiming a certain thing now seems very attractive because you'll get a little more money in your bank account, but in the next 2, 3, or 4 or 5 years, it could end up hurting you. So that's kind of the recap of what to look at while you're thinking about where your family situation falls with MSR. Okay. So take a deep breath. That was a lot, and we'll go on to the next slide here. Okay, and then this is one I've actually heard a lot from, or I think there's a lot of questions about this for military folks. So this is a sample W-2, and if you look at the bottom, it says whatever W-2 is, your W-2 is, it'll say at the bottom, box 15, state. So this one says California, it has the state ID, but it also has the state wages and the state withholding. So for someone like me, I live in Denver, I'm here year-round, mine will say Colorado, it'll have my income and it'll have my withholding, no big deal. When you're talking about states of domicile, states of residency, states of earning money, it can get a little more complicated. So in theory, your employer should report the wages to the state earned and collect withholding for that state accordingly. So if you declare a state of domicile, even if it's not where you're working, your employer should, in theory, make that designation on your W-2. In the real world, that doesn't always happen, no matter how hard you try to get HR to understand what's going on. So if you get your W-2 and that state information is not correct, the first step is to talk with HR and say, hey, I need this fixed for next year, for the future, for going forward. And then when you go to get your taxes, to prepare your taxes, each state that you're filing in or filing with has ways in their state return to allocate the wages properly between the states so that the state knows, so that the state knows which income you earned there and where the other income's going and all of that. There's also options for tax credits if the taxes were paid to the wrong state. Rather than you asking for a refund and repaying, there's different credits, again, depending on the state. And this is one of those things that if you're using off-the-shelf kind of tax software or one of the free tax programs, you're really going to struggle to get this done if you have the capability to do this. So if this is something that's an issue, yeah, I'd recommend in this point really looking for someone that has the software to work through it, but also the experience and capability to understand what's wrong and how to fix it. So that was just kind of a side note there. Okay, so we're going to shift gears again here and talk a little bit about the Affordable Care Act. That's kind of the whole, so we're done with kind of the MSR piece there. If there's specific questions on that, and the questions do get very specific, you'll have my email at the end and my phone number, so you can we can set up a consultation to kind of talk through what's your story, what's your state, and what's your numbers, and help you figure out the best tax treatment. Okay. All right, next. So the Affordable Care Act, you've all heard a lot about this, often called Obamacare as well. And what this says is that taxpayers must have minimum essential coverage. So the question is, a lot of military folks are on TRICARE, and does TRICARE meet minimum essential coverage? In most cases, yes, it does. And I actually found a little exception on that I'll get to in a second. So if you don't have minimal essential coverage, you're going to be required to pay a fee for each month that you don't have adequate coverage. So you'll go month by month through 2014. How many months did you have coverage? How many months did you have minimal essential coverage? And how many months did you not have coverage? And then there's this really nice, pretty long IRS form that breaks out how much your penalty is based on your income, based on the months you didn't have coverage, and based on why you didn't have coverage. And so there's a lot you'll hear about. You have to self-attest or self-report what coverage you had. So what that means is when you're preparing your taxes, that's exactly what you'll do. You'll have to say, I had coverage through the months of January through December, or January through March, or March through December. So self-attest or self-report means you're telling the IRS what coverage you had, as opposed to some people who bought health care on the state exchanges. They'll get a form that says this person had coverage for these months. So self-reporting and self-attesting means that nobody's sending you official tax document that says which months you had coverage. So it's not as scary as it sounds. Just you have to know which months you had coverage. And then for that penalty or the fee, if you didn't have coverage for all 12 months, there is a fee. Like I said, it's a fun formula to figure out. But there is an exception if you had, let me read this here, if you had a limited benefit Medicaid and TRICARE programs that didn't, so if you had a TRICARE program that did not meet the minimum essential coverage, you can get an exception for those months of not having coverage. So if you had TRICARE but it was the one TRICARE plan or whichever TRICARE plan that didn't meet the full minimum essential coverage requirements, you can claim the exemption from the fee on your tax return. And that's only available in 2014, so when we come into 2015, which we're in right now, but when we're doing taxes for that, that exemption won't be available. So again, Affordable Care Act is something that the tax pieces can get pretty complicated if you're not familiar with them. So have someone help you through that if you have any questions, because you don't want to do it wrong and then have to fix it later. That's not fun. Okay, so kind of that's the bulk of it, but let's just the next one. These are pretty simple money-saving tax tips. And one is to keep your receipts. If you're moving, if you have anything that you think may be deductible, keep a receipt. And if you're not good with keeping receipts, I have some clients of mine that take a picture with their smartphone and then email it to themselves with the same subject line. So later they search their email, the subject line is tax receipts, and it'll pull up all their tax receipt pictures that they emailed to themselves. So find a system that works for you to keep your receipts. Shoeboxes don't always work for everyone. They work for some people. And some people like me, keep everything on very detailed spreadsheets and very nice little boxes. But I know that I'm the exception, not the majority in that. The next thing is to know your deductions and when to make them. So educate yourself with what your deductions are, even if you don't know how to do different deductions. If you're a homeowner, know which receipts you should be keeping, know what you should bring with you to your tax appointment. The next one is to review your W-4 withholding, especially if now you're in a marriage and you're still claiming your withholding at a single level. Just a simple change on your W-4, which is the thing you fill out when you start a job that says, I'm married or single and I claim 0 through 9 exemptions. You can adjust that so that and that'll adjust your refund situation at the end of the year. And then take time to plan your tax consequences. So you have an idea of what's going to happen in your tax year for next year. And then you won't be surprised when you either owe or get a big refund. You can plan home purchases. You can plan, just about anything that you're going to spend money on, you can figure out the tax consequences ahead of time, so you're not blindsided with a big tax bill. And then, of course, to work with the right tax professional. And if we go to the next slide, who is the right tax professional? The right tax professional is someone who listens to your concerns. If you have questions about different things in your financial situation, your tax professional is going to listen. They're going to understand your family situation, whether your family is LGBT, or whether you're adopting kids, or you're taking care of your parents, or whatever it is. A tax professional is going to listen and understand how that plays into your tax picture. And they're going to sit down and research the state of domicile, where you're stationed, MSR, if that applies to you. And like we saw in that example, that can be a pretty complicated, there's a lot of variables in that, and you want a tax professional that's going to sit down and understand what your variables are. The right tax professional is going to help you plan for your future. And while it's intimidating sometimes to pay someone rather than buy a box off the shelf and dump in a bunch of numbers, you're going to save yourself time, money, and headache, especially in the long run, to know that you have someone you can trust taking care of, giving you the information on all the important decisions. And then we'll just do the last slide here, the last slide that I have, and this is just to thank you for your service. We live in a great country, and I know that all of you that are in uniform are a big part of that. I've listed some resources here. They're hyperlinks, obviously, to the Military Partner Family Coalition. Share the word with your friends and fellow service members. They're a great organization. And then some of the language on the MSIR, the IRS Armed Forces Tax Guide, and the USAA. They have a lot of cool financial links there. And then there's my contact info there. My phone number didn't make it on there, but we can go ahead and give that to you. So I guess we'll open it up we have a few minutes for Q&A. I think, Colin, I'll let you take over and see what you need to do on your end there. So thank you.
All right. And thank you, Jules. I just wanted to thank you on behalf of the Military Partners and Families Coalition, as well as everybody who's here right now on the call, and for everybody who's going to see this in the future, because it is going to be recorded, and I think that'll be a really valuable asset. So thank you for donating your time and your expertise on this to us. Really appreciate that. So
perfect.
So now everybody is unmuted. Does anybody have any questions about the presentation? Anything for Jules? Anything at all, really?
I'll just add that these slides are going to be online, and you can, Colin will send you all the link for that once they're up, and you can share those with any of the folks in your, in your communities. So go ahead with your question.
I don't have a question. I just wanted to say thank you so much. Information is very informative, and thanks for all the hard work.
Of course, of course. It's a lot, I know.
This is Tom DeSamro. I'm the secretary for MPFC, and I want to thank you as well for putting this together. And Colin, thank you. And this is all the information is really great and very useful. I don't know that I necessarily have any questions because I think you did a very, very good and thorough job in your presentation to kind of answer any questions that I might have had.
Cool, thank you, Tom. And like I said, share the information, and I hope to keep coming back year by year, and we can. If you all hear of any questions that folks have about some of these issues, go ahead and give them to me, and I'll include them in future presentations.
Absolutely. So the email address that you provided, is it possible for us, if something does pop up, like say when we are filing taxes, is it possible for us to shoot you a quick email and maybe get an answer? Or
Yes, absolutely, absolutely. I get busy, but I try to return the emails as quickly as possible this time of year, and then even in the off season as well. If people have questions, I'm always available.
All right. That's wonderful. Well, thank you so much.
Thank you.
Yeah. All right, everybody. So since there aren't really any questions, I'm just going to move along so everybody knows this is our Facebook page. You can connect with us there. I just want to talk really quick about upcoming virtual family meetings. So this was the first virtual family meeting in this series that we have coming up next month. Not all the details are set yet, but the topic will be creating community, how to develop a support network wherever you are. And we'll also be having VFMs about healthcare, financial literacy, raising kids in a heteronormative society, and other what I think are very important topics for LGBT military families. So yeah, if there's any questions about that, feel free to send me an email. My email is right here at the bottom, colin@milpfc.org, and I will include that when I publish all of this online as well, and that should be up by next weekend at the latest. So yeah, thank you again. Thank you for everybody who attended, and again, Jules, thank you so much for your hard work on this. We appreciate it.
Of course, I'm happy to be able to help you guys out.
All right.